Hi, Thomas Brinsko with BIC Magazine here. Today we're at the Gulf Coast Industry Forum talking to a lot of industry experts about the powerhouse that the chemical industry seems to be in the Gulf Coast right now. One of the speakers today is Steve Byrne with Bank of America and Merrill Lynch. He is the head of all the research for the U.S. chemical business for that organization, correct?
That's right.
Well, thanks for coming today, Steve.
My pleasure.
Specifically, I wanted to ask you about the ethane pricing that we've seen rise recently. It's been a huge pricing advantage for the United States and particularly the Gulf Coast with all of our shale gas.
Right.
But yet, recently we've seen an increase in pricing. Can you tell us a little bit about the drivers, what you think about that?
Well, the consultants that we rely on that help us with these natural gas liquids, they have expected this. At least some of them have expected it. Essentially a bottleneck in the pipeline transportation from the region where the shale gas is extracted out of the ground, and then it has to get either fractionated into its pieces, either near the shale region or down here in the U.S. Gulf. And that transportation and fractionation is a bit of a bottleneck right now because the demand for ethane has surged. It's surged because it's the feedstock of choice in the world to produce ethylene from ethane rather than producing it from an oil-derived naphtha. So it's a huge increase in demand, and the supply and pipeline infrastructure hasn't kept up.
Does Merrill Lynch see that advantage the United States has, ethane versus naphtha, continuing on in the foreseeable future?
It seems logical to us because these ethylene crackers have the ability to switch to alternative feedstocks if the price of ethane gets too high. They could switch either to propane, or some of them can switch to butane or even naphtha. And so it's likely to put a lid on the increase of that ethane price. And even where ethane pricing is now, it's still at a very significant cost advantage to, say, the rest of the world that's manufacturing these products out of naphtha.
The overall NGL market, the natural gas liquids market, seems to be rising. What do you see in the future for that market as a whole?
Well, as long as there's continued capacity investments in the U.S. Gulf, which I suspect there will be, because demand growth for petrochemicals continues to increase globally, at least a couple of percent per year. So you need these new world scale, crackers and polymer plants every year. Given that the U.S. is the advantaged feedstock, I think there will be continued expansion, maybe not at the pace that it's been in the last couple of years. But I think there's more to come, and as long as that shale gas is there, and all indications are it's there, it's a matter of getting it out and getting it fractionated and down to the Gulf.
So we have the shale supply, and we certainly have a global demand curve that's rising on a continuous, seemingly endless march. In the last 5 years or so, we've seen all this construction in the U.S., particularly the Gulf Coast, because of our feedstock advantage. Are there any other global issues that could cause the United States to lose this one advantage, or might outweigh this advantage, so that other plants they're being built in Saudi Arabia, for instance? What other possibilities are there? What dangers do you see for the United States market?
Well, I would say the risk of a global recession is always there. The trade war between the U.S. and China is a clear headwind. It's a massive amount of chemicals out of the U.S. that are exported, much of it to China. So that's a meaningful concern. That will hopefully get resolved at some point, but until then, that's an issue. And then I would also just say the Chinese are very industrious, and they're trying to work through a meaningful upgrade in their own chemical infrastructure. Much of it is extremely old and inefficient. The government is driving change there, trying to upgrade these facilities to be much more environmentally responsible and compliant, to the extent that the new technology is more cost effective. Maybe there could be a surge of new supply in that region, and reduce the demand for exports out of the U.S. I would just raise one other, and that is if the global incentives for recycling were to increase significantly. I mean, Europe recycles maybe a quarter of their polyethylene, the U.S. maybe 10, 15%, Asia none. You know, if the whole world were to move up to a European standard, you know, that would be a meaningful contraction in demand for virgin material.
Perfect. Yeah. Thanks for the insight.
My
Hey, thanks
pleasure.
for visiting with us, Steve. Appreciate it.
My pleasure.
God bless.